During our financial planning process, a lot of clients ask, how do I buy long-term care insurance without breaking the bank? First of all, you have to work with a broker, a person who represents many different companies to be able to understand fully what's out there. That's what we do. We don't sell long-term care policies. We're advisors of long-term care policies. We help you find the right choice. But when we work with our brokers, I've noticed there's a couple of types of policies. One, there's the very basic policies that you pay a flat monthly fee to. It could increase in your older years. I would expect it to, but you're looking at more reasonable rates versus policies that are built to be permanent, meaning you write a check one time or you pay over 10 years and then the policy is in force. I think where you have to start with long-term care to make it affordable is understand that you don't need 100% coverage. So if long-term care in a nursing home today in Georgia might cost you $9,000 a month, you don't need to insure for $9,000 a month, simply because you probably have Social Security, you might have a pension, you might have a portfolio either through an IRA or Roth or a brokerage account that can generate enough income to send you money each month. And then you also might have a home that's not part of your financial plan that would get liquidated to add a source of revenue to long-term care as well. So maybe if it's costing $9,000 a month, maybe you have $6,000 that you can generate automatically. Because let's be real, if you're in a nursing home, you're probably not traveling, you're not going to Publix, or any of those things, right? So in this case, you need to insure $3,000, maybe $4,000 or $5,000 a month just to cover the inflation cost of long-term care overall. In Georgia, it's around 4.5% inflation typically on long-term care facilities. So first of all, only insure what you actually need, the gap, and then go get quotes of different types of policies. And then after you have those quotes, you decide if it's worth it or not. I'd say if you have to change your lifestyle in order to afford a long-term care policy, probably not the best decision to buy it because you're giving up doing things in order to do it, in order to buy the policy. If you can do it and it doesn't change your lifestyle, it's probably a good investment because it protects your assets to make sure you can get those assets more in whole to the next generation. You can also do some calculations to see if you can fund it yourself. I wouldn't necessarily take money and put it into an account, say this is my long-term care money account, but you can understand that your lifestyle will change and you can pull from other resources that otherwise are what you're spending in auto gas and travel and eating out, all the things you do as a normal person who doesn't need long-term care. After you've determined that, then you can decide if it's worth it. Another thing is for high net worth families, very often we'll just do a paid up policy. So they'll write a check for $150,000, they buy a policy, and then maybe that covers them with $5,000 worth of insurance, long-term care insurance for the rest of their life. So it's unlimited monthly benefit when they need it. And then when they pass away, if they haven't used it, for the most part, what they paid into the plan will then go to the beneficiaries as kind of like a life insurance policy. So those are just very high level discussions. I wouldn't ever say, oh, I heard it's not affordable for my friend and I'm not going to look into it. You should definitely get quotes and figure out what the need is, get the quotes, and then make your decision from there. Thanks for watching.